Good morning. It is Tuesday, January 6th, 2026. And if you're looking at your screen this morning and feeling confused, you are not alone. We are living in a split-screen reality. On the left side of the screen, chaos, history. The United States has effectively announced it is annexing the energy infrastructure of a sovereign nation. President Trump says we are going to run Venezuela. Maduro is in a New York jail cell. The geopolitical risk premium should be blowing the roof off this market. But look at the right side of the screen. It's green. It's euphoric. It doesn't care about coups. It cares about chips. While the State Department is rewriting the map of South America, Goldman Sachs just slapped a price target on TSMC that implies the AI boom is only just getting started. So, here is the conflict for today: the war machine versus the AI machine. Which one matters more to your wallet? The bond market is flashing a warning. Gold is screaming danger, but the equity market is screaming buy the dip. Who is lying? Let's find out. This is the pre-market pulse, and welcome to the chaos. Deep Dive 1. The 51st state, Venezuela and oil. Let's start with the story that should be crashing the market, but isn't. Venezuela. Over the weekend, the narrative shifted from regime change to effectively corporate acquisition. President Trump didn't just say, "We capture Maduro." He said, quote, "We're going to run the country." He explicitly mentioned American oil majors, Exxon, Chevron, going in to fix the infrastructure. Now, pause and think about what that means for the energy trade. Normally, when a major oil producer's government collapses, oil spikes to $100 because of uncertainty. Today, WTI is sitting at $57. Why? Because the market is pricing incompetence. The market is betting that under U.S. administration, Venezuela goes from a failed state to a customized gas station for the Western world. The trade, you need to look at Chevron CVX. They're the only U.S. major currently operating there. They have boots on the ground. While other companies like Exxon, XOM, and ConocoPhillips, COP, are waiting for the lawyers to clear the runway, Chevron is already drilling. But here is the trap. The headlines say oil bonanza. The data says glut. Goldman Sachs released a note last night warning that even if we fix the pumps, Venezuela's output is years away from returning to 3 million barrels a day. Meanwhile, we have a global surplus. So, if you're buying energy, XLE, thinking this is a boom? You're wrong. This is a deflationary event for oil. More supply, under U.S. control, flooding a market that is already drowning. This is why airline stocks, jets, are holding up. Fuel is going to be cheap for a very long time. However, don't ignore the risk. Trump just threatened a second strike if the remaining Venezuelan leadership doesn't cooperate. If we see guerrilla warfare targeting pipelines, that $57 oil target vanishes. But for now, the market believes the U.S. just acquired the world's largest oil reserves for the cost of a special ops mission. Deep Dive 2. The Semiconductor Shield. Now, flip the channel to where the real money is flowing. Asia. While the Western Hemisphere deals with politics, the Eastern Hemisphere is dealing with profits. Taiwan Semiconductor, TSM, just ripped to a new record high in Taipei. Why? Because Goldman Sachs raised their price target by 35%. Let me translate that for you. A 35% target hike on a company the size of TSMC isn't an adjustment. It's a declaration that the analysts were wrong about the ceiling of the AI trade. Goldman says AI is a multi-year growth engine. They are seeing improving margins even as TSMC spends $150 billion on CapEx. This is the AI shield. Investors are looking at Venezuela and saying, that's messy. Then they look at TSMC, NVIDIA, NVDA, and Apple, APL, and saying, that's guaranteed growth. This is also bleeding into China. Look at Alibaba, BABA. We have reports this morning that Alibaba is launching a nuclear option against Meituan in the local services war. They're using AI to generate 3D tours for restaurants. and they're giving it away for free. This is the weaponization of AI. It's not just about chatbots anymore. Alibaba is using its compute power to destroy its competitors' margins. This is deflationary for the economy, but bullish for the tech giants with the deepest pockets. The takeaway: the market is telling you that silicon beats oil. The war premium in energy is dead. The innovation premium in semiconductors is alive and well. If you're sitting in cash because you're scared of World War III, you just missed a 5% move in the most important sector on Earth. The silent mover, the flight to hard assets. But if everything is so great, why is the paranoia portfolio hitting all-time highs? This is the silent mover of the day. While you're watching NVDA, Bitcoin, BTC, quietly climbed back above $93,000 overnight. Gold is up over 2% to $4,430 an ounce. Silver is up nearly 5%. This is the disconnect I talked about in the intro. Equities are pricing in a perfect tech utopia. Crypto and precious metals are pricing in the collapse of sovereign trust. Think about it. The U.S. just seized a foreign government. If you're a foreign central bank, say, in the Middle East or China, are you comfortable holding U.S. treasuries right now? Or do you buy gold? Or do you buy Bitcoin? We're seeing a debasement trade disguised as a bull market. The liquidity is flowing into hard assets because nobody trusts the fiat system when superpowers start redrawing maps. The signal: watch silver, SLV. It's the highest beta play here. It's up 5% this morning. If silver breaks $80, it means the industrial demand for those solar panels and AI chips is colliding with a monetary panic. That is the most explosive setup in the market. The lightning round. Enough theory. Let's name names. 3 tickers, 3 verdicts. Rapid fire. TSM, Taiwan Semi, verdict, bullish. Why? Goldman's 35% target hike is the green light. They're the toll booth for the entire AI economy. Margins are up, CapEx is up, and they are immune to the Venezuela noise. On the toll booth, not the cars. UnitedHealth, verdict, bearish. Why? The Wall Street Journal just exposed a massive billing scandal. They're accused of costing Medicare billions with excessive prescription refills. This brings regulatory heat. In election year cycle, you do not want to own the villain of the healthcare story. Sell. Alibaba, verdict, bullish. Why? They're finally fighting back. The new AI 3D tour tool is a direct attack on Meituan's monopoly. Plus, the stock is cheap, and they're launching IPOs for their AI subsidiaries, Minimax, in Hong Kong. The breakup value is unlocking. Your January 6th playbook. All right, here is your playbook for the next 24 hours. Watch the oil peg. If WTI crude stays below $60, the Venezuela panic is over. That is a green light for airlines, jets, and a red light for shale drillers, XOP. The AI check. Watch NVIDIA at the open. If it follows TSMC's lead, we are rallying to new highs. The hedge. Do not ignore that gold/Bitcoin move. Keep 5 to 10% of your portfolio in hard assets. The world is unstable, even if the VIX is sleeping. This is the pre-market pulse. The news is chaotic, but the trend is your friend. Trade smart. Yet if you like our content, just hit that subscribe button and you will get notification for latest update.